All right. Well, good morning, everybody. This is Marziti here with the Bullish Bears. It is Thursday, June the 4th. We're going to, I starting a little bit early today. I don't know if I'm going to do this on a regular basis as far as starting early, mainly because I want to explain how my charts work, because it's different. And so we'll start with that there. And this will be recorded. Uh, but at this time, I don't expect it to be in the Bullish Bears library. It'll be in my library, and I'll post a link to it. Um, I am presently in a trial to see if I'm going to take on a uh, more permanent streamer role. So we'll see how that plays out. And right now, I'm just scheduled for Thursdays, but we'll see, maybe more. I don't know. Depends on how things go. All right. In part of our prep for the day, uh, there is a certain amount of background prep that we have to do when we get started in the mornings. The first thing, news moves the market. Now, it's important to understand that it is not always what the news says as much as it is the release of a news article or topic or whatever that the market is um, expecting or sometimes not expecting. But the point being is that, for example, we had this morning, let me get my little mousy highlighter up here. Y'all, I hope y'all can see that okay. At 8:30, we had initial jobless claims. Now, it's important to understand that you come in and we say, well, jobless is up here. Let me zoom in on that. You see this here? Jobless came in a little bit hot at 225, where it was expected at 215. And you may say, well, the market should crash. That's terrible news. No, 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 no. The market makers, and not the market makers, excuse me, I should that's the wrong phrase. The institutions have a move planned long before the news comes out. And because of that, they're simply waiting. Now I'm Eastern time, so this is 8:30 Eastern time. So they have a move planned that simply triggers at 8:30. So it really doesn't matter what the news said, good or bad. It's just they all agree that all the institutions are going to make their move at 8:30 Eastern today, unless the news is way out of expectation. So when we see some really positive news and the market falls, and you're like, well, that shouldn't have happened. The news was positive. It's because the move was planned before the news was released. And with multiple institutions, each has got a different plan. And so it's a question of, well, which way is it going to go? We don't know. It depends on who threw how much money and where they were in the order queue. So it's important to understand that it's the timing of the news, not the nature or not the text of the news that causes the move. Okay, but we do want to know that that's happening. So our next thing here, Treasury Secretary Bissett speaking at 10 o'clock. Um, that of and by itself doesn't mean a lot, except for the fact that, at some point during his 30-minute, hour-long speech, whatever, he could make a bold statement or a misstatement, or the algos could misinterpret something that he said, and the markets could heavily react. And we don't know when or if that will happen. Excuse me. So, that being the case, we simply want to be at that time on guard that there could be an unexpected violent move in the market. Beyond that, that's all we can say. That's all we can say. So we are clear until 10 o'clock with the news today, other than obviously the market open. All right. Now, I have what I call the grocery store here. Now, what is a grocery store? A grocery store means that you don't take everything. When you walk into the grocery store, if you're not interested in a chocolate candy bar, you don't buy one. You may see it, but it doesn't mean you're going to buy it. Nor does it mean that if you don't need flour, you're going to buy flour. You may see it, but but at the same time as you're walking through, you're looking for certain things and you kind of scan the aisles and maybe something's on sale or something like that, and you may think, I'll pick some more of that up just because it's a good price or whatever. Well, what does that mean with my charts here? What that means here with my chart is that I have a large variety of things on the chart. And it does not mean that every single thing here has to be accounted for in a trade decision. But everything here tells part of the story. So let's just first begin. Notice the blue and red candles. These are Heiken Ashi candles. Heikenen ASHI. Heiken Ashi. It's different from a regular candle because it shows trend. It's like, now, some of the folks there use, like they talk about, well, I use an R40 candle, a range 40 candle. Signet uses hollow candles. So with, and Lucian, I believe, uses regular candles. So you've got to understand you've got 3 different types of moderators in here, or streamers. They've all got their different strategies. They've all got different ways they set up their charts. It's important to understand what they are doing. I mean, how they trade, and nobody is right as far as being better than anyone else with the way they set their chart up. They're just because all trading strategies work sometimes. No strategy works all the time. The story is it's in the context with the mastery of your own trading strategy. Okay, now I have a 5-second chart over here. A Heiken Ashi candle, like I said, is used to show trend. As you can see here, this is a trend. And the way you interpret a Heiken Ashi candle is you're looking for the wicks. I'm looking at the wicks. Notice, let's just kind of zoom in. You see this candle here. No wick. Upper wick. It's blue, meaning bullish. Then the next candle comes up, and let me finishes up here. Bullish, bullish. An indecision spinning top, breaks, indecision spinning top. We resume. Now, granted, there's a lot of chop in here, but the point being is that sometimes we will see just a massive trend, like right over here. We see that. Now, so the way to understand a Heiken Ashi is if you see a wick on both ends of the candle, that's indecision. If the wick is on the side that it's trading, bullish or bearish, that means, so right here, bullish, bullish. There's your entry if you were trading Heiken Ashis. Your stop would be down here, which, of course, okay, there's a stop out. We see there's a lot of chop in here, of course, and we see it hit the midline of that Bollinger Band, so that's, okay there. Here's a bearish setup. You would have gotten in at the break of that spinning top, going down, looking to close your trade down here as we hit the lower Bollinger Band. All right, so that's one way that we can look to trade Heikin Ashis. They show us chop and they show us momentum and trend. Okay. Second, I have Bollinger Bands, being this yellow, white line is the midline of the Bollinger Band. This is a standard 2 deviation. So these dotted blue lines are the Bollinger Bands. We'll talk more about how to trade those as we go along, but they simply tell me that price should stay between these two outer bands, the blue bands, 90% of the time. But it can push it, and I'm using these also, that when we start touching these outer Bollinger Bands, I'm starting to say, looking for exhaustion, for a reversion to mean, or a change in trend. Down here is the RSI. RSI is very much what we're going to call a secondary indicator, because it only tells me a little bit. It's a very small percentage of the decision process. Here I've got the 1 minute chart, Bollinger Bands, all right? These orange lines are the fan lines. Now fan lines, let me just move this over to a 30-minute chart for a moment. Ooh, didn't realize I had that there. Let's get that off the screen. Oh, by the way, this trading platform is NinjaTrader. I know people like Signet hate it. I love it. What these fan lines are, we take market open at 6 p.m. Eastern, and moving up until 5 a.m., which takes us into the London session, we're looking for the highest high and the lowest low during that 6 p.m. to 5 a.m. session. And we use that as a measured move from high to low, and then going from that vertex at market open, we draw eighths of the measured move. 8 above, 8 inside, 8 below. And remarkably odd, interestingly, the algos follow these things. Doesn't make sense, but it happens. You can kind of see, like here we touched it, here, it just kind of seems to, these red lines are the markers, just ignore that there, but you can kind of see here we open going down, and so on and so on. They make for targets, sometimes entry points. We'll just have to, but again, it's something that I put on. It's part of the information. This purple line is VWAP. VWAP is a moving volume profile. It's a different formula, but it is a sort of like a moving support and resistance line. We want to always kind of keep that in mind. This gray area is a fair value gap. And this dotted yellow line is intraday volume point of control. Now, I want to point out that if you listen to Signet's briefings in the mornings, VPOC to him means virgin point of control. To me, VPOC stands for volume point of control. They're both about point of control, where the trading volume, the heaviest amount of transactions have occurred, but the V has a different meaning. Again, the difference between streamers, moderators, whatever. So keep that in mind. 5-minute chart over here. This is a pseudo Bookmap jigsaw type heat map built that you can build into NinjaTrader. Now, the reason that I like this is you can get very similar to Bookmap or Jigsaw without having to buy Bookmap or Jigsaw. If you have a level 2 subscription on Tradovate, and I'm tied into Tradovate, on NinjaTrader, you can do this at no additional charge. Is it as good as Bookmap? Absolutely not. Or Jigsaw? No, not as good by any means, but it does show you the bubbles, the volume bubbles, and it shows you the resting levels. So there you go with all of that. Now let's start marking up, and we'll get into everything there. Yes, happy Thursday there, Amity. So let's start by going to my 30-minute chart. And let's blow this up. What I want to do here, this is the 30-minute chart. This is today. I'm not interested in that right now. What I'm interested in is in yesterday and the day before. And what I want to see here is this is the point of control, the volume point of control from yesterday. I'm going to mark that line because that was the most favored price yesterday. And if we go north, guess where we're going? To what we really liked yesterday. And here is, today's Thursday, so this is Tuesday's volume point of control. And here's Monday's. Now, the further back we go in time, the more they lose their strength or their influence. But you can kind of see what you may see is if we go north and we start coming back up, we'll come very possibly to one of these volume point of controls. Now, if you study auction market theory, you would be interested in this volume node right here, this volume node right here, as weaker but potential targets for targets north if you're into auction market theory, the idea of following volume. Now, oh, wait, I forget to do some things here. Let's go to the 15. For the supply and demand traders, let's take a look, and in general, let's take a look at some things. What do we have right here is what's called an order block. We had a downward move, a pullback, and then a continuation. So we can mark this right here as an area of interest, right kind of in here, and I'm going to leave that as yellow because it's an order block, it's an area of interest. Let's go into, I really need to turn these off, but you just kind of see we've chopped all on this intraday VPOC all morning long. So I really don't see anything substantial there. These, I think, are just way too far out of bounds to mess with. So let's see, where are we today? We are here at 75.40-ish. Let's go further back in time. $75.20. What do we have here? We've got a zone right here. We'll go ahead and mark that. And that is going to be a buy. That's going to be your demand. And we're really going back in time here, so I don't see much I am not a supply and demand trader, um, so, but I will mark it out for those of you that are interested. Looking, you say, well, are there any supply zones? That's demand. Are there any supply zones? Um, again, I really don't see much. What I do see is this chop zone right here. And what I'm going to do is I am going to mark that also as an area where we got stuck. I'm going to start here. I'm kind of looking to capture the bulk of the candles right there. Now, what does that tell me if I come into that zone? It means chop. It means chop, and it means that, I don't know, direction indecision. We don't know what's going to happen when we get into these zones. These are areas where I do not want to take a trade, initiate. I will use it as a place to get out. Let's say if I were long, if I had a reason to go long here, if it hits into this zone, I'm looking to close my trade because this is going to be chop. Does that make sense to everybody? I hope so. And let's put you back in your space. Come here. Really? There you go. Okay. All right, 922. Let's start looking at what the market is telling us today. I want to go over here to this 5-minute chart. We hit this upper Bollinger Band at 6 a.m. this morning. We came down, tagged this fan line. Remember the dotted yellow line is intraday VPOC. Came down, hit that fan line again, kind of went 50% in between the two of them, back to VPOC, upper Bollinger Band, midline, upper, walking the upper. We're expecting then, since we hit, if you understand anything about Bollinger Band trading, it has a tendency, there are patterns to it. And the pattern goes like this. You either bounce off of the white midline or you break it and go all the way through. So here we came up from the lower band, upper band, back to the mid band, midline, bounce, up. And what we see with Bollinger Band trading is several things. Number one is oftentimes it will hit the midline once, maybe twice, and then it'll break to the other side. That's very important. The other thing is when we're moving in a direction. Here we're kind of walking up that midline, that upper band, and then we started going sideways. And when we see it hitting the upper or the lower and walking it, and then it starts going sideways, that tells us we're going into compression and a move is expected. Okay, that tells us that an explosive move is expected. So that's part of Bollinger Band trading. So here I am on the 1 minute. Let's watch this and see what happens. Remember, trading is everybody's got a different trading strategy, so I'm going to call out a variety of things. I don't know what your trading strategy is. I've already done my market trading because I trade in the pre-market generally. So, hello here. What have we got? So let's take a look at, well, what just happened? We were walking the upper Bollinger Band, midline, upper, midline, upper, midline, break, bounce all the way to the other side, midline, sideways, down we go, heading down here to 75.47. Now, you cannot just use the Bollinger Bands of and by themselves. You have to take things into context because they can walk the band, right? So you have to say, well, where's it going? Well, it could be going to a fan line. It could be going to the prior day close, prior day low, VWAP, VPOC, market open. There's all kinds of places it could be going. And so we start our analysis first over here on the 5. Look right here, the midline of this Bollinger Band, 75.45. What's at 75.45? The midline of the Bollinger Band and a fan line. Look at this Heikin-Ashi pattern right here. Down and down and down it goes. Fair value gap was created right here. RSI says oversold. Now remember, RSI can sit down here and oversold until doomsday, and that does not give you a trade. RSI is not a trade indicator. It's simply kind of what RSI does is tell you the momentum in a direction. The momentum to move the market in a specific direction. So here we were seeing a lot of selling momentum, but eventually you have exhaustion. Exhaustion stalled. Let's understand, if you look at the RSI, when you're in the 45 to 65 range, that means nothing. No momentum really, because you're too close to the middle. We use RSI to help us understand the extremes. Boom, right here. What do we see right here? We hit that lower Bollinger Band on the 1 minute. What am I looking at? A target still, though. We could still continue to walk this thing down. Is everybody hearing me okay? Is everything good? Can I get a voice and video check? I should have asked for that to start with. Thank you, thank you. So notice this Heikin-Ashi pattern here on, there we are. Notice this Heikin-Ashi pattern right here. Let's open that up a little bit. See where it rolled right here. We had that bullish candle, but then it broke. Now, depending on how you really want to trade this, you could, if you had an entry signal, you can take this short with your stop back here. Or this is the bullish candle. Let's open this up. I might even zoom in on it. Or here's your first bullish or bearish candle. And if you trade pure Heikin-Ashi, that would be your short signal right here when it goes one tick past this low. So you would have gone short here with your stop back here. The challenge in some of this sometimes, though, is where, the stop is really far back in the back. Now, some moderators, like when Kevin was trading supply and demand, what he would do was take a lighter position so he could justify the cost of putting his stop further back. And that was fine. That's his trading strategy. And it worked for him. All right? You have to decide that. Market open? Is it market open? Really? Ooh, Tootie. What do we see? VWAP. Wait a minute. Where's my... Come on. Where's my thingy? Oh. VWAP. VPOC. Market open at 6 p.m. Fan line. Fair value gap. Now, what do we do in the first 5 minutes? If you're not a very experienced trader, you do nothing. We sit here and we wait to see what's going to happen. Now, let me explain to you what happens at market open. There's a thing called market on open, M-O-O, or moo. What is moo? Institutions that want to take positions in stocks for the day will send to the market makers an order that says at 9:30 Eastern Time, market open, I want to buy 5,000 shares of NVIDIA, maybe. I want to sell 10,000 shares of AVGO Broadcom. Now they sit on the books until 9:30. But the market makers have got them sitting on the books waiting for 9:30, and as soon as 9:30 happens, blam, in they go. As far as these indicators, I'm more than happy to share this with you. However, you will find it easier. I'll post a video on that because it has to be created. It has to be created. It's a series of it's a series of using two types of indicators plus blah, blah, blah. Anyway, it takes a little bit to set it up. I will share the video on how I learned how to do that. Remind me as we get towards market close or end of stream in case I forget. All right, resting levels right here. Now, what do these levels tell us? You know, a lot of people are like, okay, Bookmap. Everybody's at Bookmap. That's where you got to be. No, you don't. You don't need Bookmap. It's part of the story if you want it to be, but you reach a point where you have information overload. Okay, what did we do here? I'll come back to this in a second. Where are we going? Right here. What is right here? Stop orders for people that went short. We call this liquidity. People talk about, well, what's the difference between price action and technical analysis? Technical analysis is candlestick patterns, it's trend lines, support moving averages, things like that. Price action, in my opinion, is one extra thing, and that is, where does liquidity rest? Where are the buy and the stop orders? Okay, and that's where you can use this, but a lot of times this can be it right here just by looking at the chart and the context. I see this fan line, I see the Bollinger Band. See right here, we're starting to walk back down on the 5-second chart. Where might we come? You see this little grouping right here? All right, let me get that. See that little grouping right there? There's your order block. So we hit, wait, okay, yeah, I went off screen there with my candles. So we hit the midline. What can you do here? A measured move. Let's see. What did it do? It hit that fan line, which was also the 236. Rejected. Do I have a close? Where are my closes now? I'm in that reversal zone. I'm in that. There you go. There's your answer. Remember, we talk about these measured moves, and it went all the way to the 111 on the far side. Now, this is a 5-second chart, so because of that, these moves are going to be more extreme. I'm measuring smaller amounts here. So if you're a scalper in a very small time frame, you know, this is a place you can be. Let's see, well done, Ironclad. I'm not sure that you're in the chat though. Cool, I'll give him a Thumbs up. There you go. All right, let's get back over here. What am I seeing right here? Bullish Heikin-Ashi. Bullish Heikin-Ashi. Spinning top is forming. That's giving me a reversal pattern. Could we have seen that reversal pattern? Yeah, it was right here. Oversold on the, or overbought on the RSI, walking the Bollinger Band, and number 3, the fan line. Three things. Blam. Caused that reversal. Now, could we have looked over here? See how this is kind of here on the heat map? You can see it's kind of faded out a little bit for the moment. There it is, coming back. That's one of the downsides to doing this. Bookmap would not have done that. It would have stayed consistent because it's a separate application. But, you know, or Jigsaw would have been more consistent. So that's why I say this is about 75% as good as Bookmap or Jigsaw. And if for you that's good enough, fine. You can do it inside NinjaTrader. As long as you have level 2 data, you can do it inside NinjaTrader. Just a quick, let's see, where are we going here? What do you see right here? I see a 118. Do y'all see it? High, low. There's the 118. Okay, there's the 236. That's it. That's good for a bullish thing. Now watch this on the 1 minute. Remember that anything between the break of the box and the 236 is the reversal zone. But most of the time, it is in the 111. You can see this candle was right in here. It did reject, come back inside the box. Now we're running, there's the 50. And what's that right above it? A fan line. Now, I'm not saying that the fan lines are perfect by any means. Like anything else, they're part of the overall consideration. They make for good targets and stuff like that. But that's, get rid of that. We've made a 50% move. When do we draw a measured move? By the way, this is an open mic session. If you need to chime in, the measured move is when you have a significant high. This high here took out a bunch of others over here. There's that high. Took out a bunch of stuff over here. We have a significant low. Took out a bunch of these lows here. Now the order doesn't matter. It could have been the highs first or the lows first. It doesn't matter. We just have to have significant both. And then a move back into the middle. So we had one extreme, the other extreme, back into the middle, and that's a measured move. Remember on the 1 minute we hit 50% here. What do we see over here? We came from overbought, we're cooling off, we're back down around the 50. What does the 50 on the RSI tell me? Nothing. Not a thing. It tells me there's no momentum in either direction at that time. Let's look at the short-term Bollinger Band here. Oh, wait. Walking the Bollinger Band, walking the Bollinger Band. What are we doing right here? Kind of going sideways, aren't we? There we go. There's the break. Where are we coming? Here. Or here. Well, we're at the bottom of this one, here on the 5 second. Does that mean we're going to go? No, it doesn't mean anything yet. Let me explain something to you. You don't just pull the 5 second chart up and trade on that. You always have a higher time frame up. Now, I'm going to be trading predominantly off the 1 minute using the 5 minute. as my reference. What do we see here? Rally, basing candle, drop. Now, in an ideal world, that would have been red. The base candle would have been red. But you don't, you know what you want, you take what you can get as far as a perfect reversal. Now, how does a rally base drop play out? Well, you expect at least the base candle's low here and possibly even a full 180 to come all the way back around and take out that low. Doesn't always happen. More than likely, what I'm looking for in this rally candle is the midpoint of it. Is the midpoint. All right, back over here. What is our RSI? Nothing. Telling me nothing is in the 50s. So no immediate strong momentum in either way based on RSI. What is the heat map showing me? Sell. Sell. Let me talk about that heat map for just a second while we're waiting for this. Remember that these are resting orders, but the question is, well, what do those resting orders mean? Like here, look at that. Here's that resting order to buy. It could be people wanting to go long. Yes. It could also be people who were shorting the market and that was their get out point, their stop. We don't know that. Answer, we just know that there's a lot of orders sitting there for some reason. But you can see how this is blacked out, which is the reason I'm telling you, showing you that. There it goes. Okay, it fills back in. So it's not as good as Bookmap or Jigsaw, but it is there. All right, resting, some resting liquidity right here, resting orders. But the other thing is, some people say, well, that means if it goes down here, I buy, right? Doesn't that mean I buy? No, doesn't mean. It means there's a certain number of orders. I'm just going to pick a number. Let's say that there's 200 buy orders here. Well, if price gets down here and they have 300 sells, it's just going to bust right through that and keep moving, right? It just tells you it's a hot zone, and we don't know what's going to happen there. We just know it's there. Okay. That's the problem with your Bookmap stuff. You've just got, and that whole idea of using Bookmap. To be honest, if you want to use Bookmap, you need to learn something that's called Auction Market Theory, AMT, and the master of that is Tom B. over in the Bookmap forum, Discord group, and they've got they got videos, and they have a YouTube channel, and I believe Tom's video on Auction Market Theory is in YouTube, and I can send anybody a link on that. But to really understand what Bookmap or Jigsaw means, it really helps if you go watch Tom's video on Auction Market Theory. So you can go to YouTube and Google Auction Market Theory in the Bookmap channel on YouTube. All right, we busted through that midline. We busted down this fan line. Where are we going? Here. What is this PDC? Prior day close. You'd be surprised how we continue to come back to that over and over and over. What is significant about this? Well, there's 1, 2, 3, 4 things in that 2-point range right there. Purple is VWAP. The orange line is the fan line. The big one of the whole thing is that yellow dotted line, intraday, VPOC, volume point of control. That is the price. Where more trades have happened than anywhere else, because that's the price that people like the most at this time. Remember, VPOC will move throughout the day. And then, of course, the bottom of the Bollinger Band, but that's of and by itself not necessarily a hard in the line in the sand stopping point. It just simply is a statistical place. Look over here on the right, oversold, VPOC. You say, okay, does that mean I go long here? Not around VPOC, you don't. VPOC is an area. It's a band. Yeah, there is a line here at 75.44, but plus or minus 5 points. People are happy plus or minus 5 points around that thing. It is an area. All volume point of controls are areas. As you can see, it did play out very nicely back up here to the Bollinger Band midline. Above that fan line, watch for some chop here. Where are we going? Where are we going? We're showing overbought here. We may roll back down. See this line that was moving up towards it. So if you're short here and it plays out, though the problem is your target keeps getting closer and closer and closer to you, which means that every little 5-second increment, you're actually losing money. Because how much money you can make in the trade if you're based off this reversion to mean keeps moving towards you and reducing your position. Sideways. Expect a move. There we go. Breaking out. Possibly bullish, long. You could go long right here. Your stop down here. There you go. Notice that Heikin-Ashi pattern's playing out. There. All right, losing momentum. Sideways, look at that. About time for it to come home. Maybe. No. It's continuing. These two are chop candles. Here we go. And there. Now, could come back here, or it can bounce. There we go. And here. Maybe. We don't have the break yet. The break happens right up here. One tick. There it is, right there. There's your long signal. Stop is down here. Well, actually, the stop would be on the break. The candle right before the break. Okay. Sideways. Sideways. Trying. They're trying. Look over here. Here's the 1 minute. I know it's zoomed in, but, you know, there's your ultimate goal right there, is the top of this candle. And the question is, are we going to make it or not? Here shows we're chopping on the midline. Okay, there we go. 5-second chart over here. Let's reset this. Zoom it in. Chop, 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 chop. The problem with the 5-second is you got to be an ultra tight scalper here. Ultra tight scalper. You can do it. Absolutely, you can do it. But look over here. Look over here. Where are you? Low, high, higher low, back to the middle. You're in the middle. We're in the middle of this measured move. That's not good for a trade because we don't know which way to go. There's no indication yet. So we're watching. What about over here on the 5-minute? High, low. We're in the middle. Look at that midline though. And you can see the low of this candle is about where that Bollinger Band midline is. It's kind of acting as support. We've got a bunch of orders up here sitting at 56, which happens to be where that fan line is. So we'll go up here and we'll see what happens. They either have enough money to bust this and move on higher, or they don't have enough money and they get slammed back down. Here we go. There we are. There you see it. Big green bubble. They had more than the order was worth, than the resting orders were. So it's moving on up. Next level, 57.75. And then 75.60. What's 75.60? The upper Bollinger Band. All right. The upper Bollinger Band is not something that stops a price in its tracks. It is simply a statistical edge of where it should stay. Now it did, you see it walk, see that Heikin Ashi pattern right there. Walk, 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 walk. Indecision. Walk, 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 walk. Where are we coming back to? Here on the 5-second, very possibly. Now, okay, busting. Where are we going? Here. Remember, this line's coming up, so they're going to meet in the middle, very possibly. Also remember, there's only one to 2 points here. It's only 1 to 2 points. It's very zoomed in on the 5-second chart. Fan line, midline. If we're going south, we reject here. There. Let's go over here. Back to this midline on the 1 minute. And see, we kind of got competing information here. Indecision on the 5-second. Now this works on the 1 minute just as well as it does on the 5-second. Remember, trading is fractal. Fractal means whatever happens on one time scale, you can find the same thing on another time scale, on just about all time scales, even dailies. All right, back to the midline here, which gives us an indecision candle here. All right, we're walking. Here we go. We break this south, we start a pattern. There. We've started a pattern. If I were going south, I'd put my stop probably right here, right above, well, 1 or 2 ticks above there. There you go. Little order block. What am I seeing here? Left shoulder, head. Maybe a right shoulder is going to form. If we do get a right shoulder, that'll be a reversal pattern, right? Because we were bearish and we went into that head and shoulder. There it is. Now, if this plays out as a head and shoulders, we go from the head to the left neck. And we would target 75.58.5 unless, I mean, obviously we've got the 111 to get through. It's rejecting in the 111. Oops. Midline. Okay, looks like it's going to fail. Maybe. You know, it doesn't 100% fail until we break the bottom side of the box. Problem with a head and shoulders pattern is the stop is way back there. Remember, if this thing still plays out, we either go to the 50 at least, or we break down to the 111 and the pattern fails. We continue to reject in the 111. This is our second run at the 111. They got pushed back. Now do they have more money to go? I think they do. Primary target 58, there it is. Secondary target, full measure moved at 50, 7560.5. Although the 78.6 is a very common reversal. And you can see we're within a tick of it. So very possible this is where the trade, okay, there it goes. It's stalling. We talk about a measured move, but the reality of it is the 786 is oftentimes the full extent of that measured move. It does not always make it. I think it will. Boom, there you go. Next target, fan line. We are at the top of the Bollinger Band over here. Look what happened the last time. We got slapped down. We're overheated. Let's go here. 63. Right about here. So watch this area right here for a possible reversal. All right, looks like they pulled the orders and they moved them up to 65, 66, 65, 66. All right, this, oh shoot, what's the word for it? Baiting.
Hey, we got 2 minutes till Treasury's
Thank you.
Secretary speaks dissent.
Thank you, thank you. Now, remember what I said earlier in the very beginning of the stream. Bissette's going to speak. We don't know what he's going to say, which means, and we don't know when he's going to say what. So that being the case, be on guard with your trades. He can make one sentence, be it 5 minutes from now, 10 minutes from now, 20 minutes from now, that the algos do not like it or extremely like it. And all of a sudden, markets skyrocket. So does that mean, well, I guess I can't trade for the next hour? No, but it means you need to be aware that we may have volatility. We just don't know if or when. All right, rejected this fan line. Also, filling in a fair value gap right here. See the gray box? Filling in that fair value gap. The 5 seconds left a fair value gap over here. What do we see on the order books? Order down here at 54, 55. Big sell bubble. Absorbed, maybe. Midline of the Bollinger Band. Bissette. Good evening, good morning, whatever. Blah, 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 Iran. Blah, 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 blah. Some people are asking, why is Iran so difficult to deal with? You have to understand there are actually, they keep talking about talking to the Iranian supreme leader, blah, blah, blah. He's not the only party doing stuff over there. There's the Republican Guard, and they are doing their own thing regardless of what the supreme leader is saying. The supreme leader is saying, peace, we want peace. And then the Republican Guard goes and launches missiles. And he can't stop them. So we actually have got two parties we're working with over there, and apparently the Republican Guard is being radical, just unpredictable, radical, blah blah blah. And that's the problem with Iran, is they don't have one centralized person or group calling the shots over there. That's the problem. All right, indecision followed by remember that chop zone I talked about up earlier? There it is. And in pre-market we marked up that chop zone. It was a price really liked, because price chopped and hung around up there. So it's sort of like a little miniature volume node. All right. Inside of inside. There you go. There's the break south. Filling that fair value gap. Here's the fan line. What's happening over here? Bounce. And I think it's going to bust south. I could be wrong. But I think it's going to bust south. It's trying. Remember, trading is a who can throw more money at it game. Who's willing to throw more money at it? There it goes. It is starting. Look here. Here to here. Where's the midpoint? Just happens to be the VPOC, right? Intraday VPOC. So we've got the midline. That could cause us a little problem. We're hitting it now. We're roughly in that area. Fan line over here. If we go south, remember, this is an area, not to the tick. Which way do we trade when we get to that VPOC down there? We don't know. It's base. If you ever played the game tag as a kid, you had base, and base was the safe place. And then when you were on base, you waited for the person running around to look away so you could run somewhere else. So when we get in base, we don't know. Now we can look at this midline slope, and we do see that it is bullish here, and on the 5-minute it is bullish. So if I were looking for trades overall, I would be looking for a bullish trade, because that's trading with the trend. But pullbacks are, very common. As you can see here, we've started, remember, 5-second, 1-minute. This is going to change first. This will take 12 times longer, because there's 12 5-seconds in a minute before this slope starts to register. And then this is a 1-minute to a 5-minute, so this slope will take 5 times this, or 60 times this, right? Before it changes. Where are we going? So far, so that Heikin-Ashi pattern, well, it's not really a clean pattern though. You've got a lot of wicks on both sides. There we are on the fan line. Here's prior day close. Chopping on that fan line. Fan lines don't make any sense. They work, but they don't make any sense. They're just angles that the algos keep track of. Now, credit due to this, it goes to one of our former moderators, Jeremy. Jeremy was one of the former moderators here and streamers, and he is the one that noticed there was a pattern. And then I took what he saw and refined it and really dug into it. Okay, bouncing off that fan line. Watch here. Not oversold or overbought yet. Indecision. Wicks on both sides. But here you can see that Heikin-Ashi. Here's the indecision. Here's the break south. Down, down, down. Target, indecision. Rejected, headed back down, back to the fan line. Where are we going? That low right there. Heikin-Ashi candles, the open and closes are different than traditional candles, but the high and the lows are the same. So as you can see, we continue to come down here trying to run this, and we keep getting rejected. Now, if we bust this, we're going down to VWAP. If we reject, we're going back to base, and we're in base again. Going back to intraday VPOC, volume point of control. If we go north here, midline of the Bollinger Band, and then that fan line, because Heikin-Ashi candles are drawn differently, this fair value gap would make perfect sense if I was on regular candles, but because Heikin-Ashi candles are drawn differently because they show trend, it doesn't make sense here. But if I converted these candles to regular traditional candles, you'd see the fair value gap. No trade. Really, really no trade. Why? Intraday VPOC, we don't know which way it's going to go. We're in a chop zone. Any questions right now while we're in the chop? We can kind of look over here. We see that, oh, there's some resting orders. We just tagged it. And what happens? There were some sell orders there. That looks like they got absorbed. Not enough to totally turn us around. And we busted it. Around here. All right, indecision goes to a bullish candle. The actual break, when this candle completes, assuming it looks still something like this, would be up the one tick above the high wick. We got to wait for this candle to finish. Challenge here is if you go long, there's not a lot of room to run here. Your target profits are really close. All right, this candle's completed. We'll watch this candle. If it breaks, you could take a long, but again, you've got a lot of resistance right here, and so that long could get smacked right back down. Bollinger or RSI, there you go. There's your long signal. There's your first resistance. Fair value gap reversal zone. First target here, second here, third the high of this candle. Watch over here on the 5 second. Watching for reversals on that 5-second. Oops. Nice, clean Heikin-Ashi. Very nice and clean. Taking out the, totally hit that fair value gap. Now, the ICT trading strategy was the idea in this particular setup was a high, a low, a pullback into a fair value gap, and then a rollover back south, with the idea that in the fair value gap, there were people that wanted to go short here but missed their chance, and maybe they still want to go short. So price returns, and they get their second bite at the apple to go short. It used to work like clockwork. There we go. Fan line, next target, this high right here. That's where stops are. Fair value gaps, this whole ICT thing used to work just amazingly well until the institutions figured it out, what the retail traders were doing. And so once they figured it out, they changed the way that their algos worked and started running over all the retail traders, and the fair value gap trading strategy crashed and burned. All right, we hit that fan line. We're coming back here. Small thing, but notice here on the 1 minute, we're still very much nicely bullish with the Heikin-Ashis. Now, can we do a measured move here? Absolutely. We've got a significant low here. We've got a high here. Let's watch. Fan lines acted as resistance. Yeah, we could go over here and watch the 5-second chart, but the real trade, because there's no profit in these trades. Look, it goes from 63 to 59. There's only 3 or 4 points in that. We're hitting this fan line right here. Watch the tug of war. The yellow dot is the current price. Watch the tug of war. Right now we're in exhaustion. One side, both sides are throwing money. The question is, who's got more money that they're willing to throw into this trade? Eventually, one side runs out of money, throws in the towel, and the market resumes its trend or move. See this tug of war just stalled right here. Remember, these are these people that wanted to go short. These are these people that wanted to go short. They missed their chance. Price is giving them a second chance to go short. And so maybe some of them did go short, and they're like defending their position by adding more to their trade to go short. Most likely their stops are up here. All right, these people that went short are taking heat. Indecision candle still on the 1 minute. Let's back this out a little bit so we can see what's going on over here. All right, there we go. 5 seconds showing us. Look at that. We've started a Heikin-Ashi pattern. No lower wick, no lower wick, no lower wick, so on and so on. Now we have a lower wick, exhaustion. So this is where we're now looking to get out. At this point here, we'd be moving our stops about here. And out. If you were long based on the Heikin-Ashi idea, with an expectation. Notice we're going sideways. What am I seeing here? Bull flag. See that? Here's the post. Here's the pullback. If we're talking about the ICT and all that kind of stuff, this would be the formation possibly of an order block where we have a run, a pullback, and then the continuation of the run. But right now, notice this kind of diagonal back here and, okay, breaking the pattern. The pattern, whoops, pattern was here. Kind of here, right? And you can take the measured move from here to here if you wanted to see how far, boom, there we are, fan line. Look over here. These people that went short here are most likely getting stopped out here, unless they want to defend their position more and throw more sell orders in. So now we've got a fight over this area right here. Remember that this 111 is the highest liquidity area. Remember, I say liquidity is the difference between technical analysis. It is where technical analysis becomes price action, is when we take liquidity into account. So if we're just talking about patterns, that's technical analysis. When we throw in liquidity, we're talking about price action. So we took liquidity right there, barely one tiny little tick. So these people's stops either got triggered or they added to their sell orders to keep it, to knock it back down. You say, well, can we see anything over on the heat map? Yeah, 75, 65 is where we're showing it. Right now is the next sell line. I started to mention this earlier and I got distracted. When you see these resting levels start moving up or away from price action, it's called baiting. It's illegal, but you can't prove it. And the idea is that, let's say you're using this line right here, and price starts coming up to that line. All of a sudden, this line disappears and it shows up higher. And it's sort of a carrot and stick kind of idea, is that they're continuing trying to get price to follow the big order. And technically, it's called baiting. And like I said, it's illegal. But, you know, the institutions can always say, well, we reassessed our position and decided that we could do better. There's no way to prove it. Same thing on the buy side. When you see that these lines start moving away, if it's the same institution doing it, it's baiting. And again, or some people call it spoofing. I think actually the right word is called spoofing. And I said baiting, but it's actually spoofing. Wrong word on my part. So spoofing, it was a famous story of a guy that would put in like 10,000 order at a certain price level, and price would just start running for that level, and then he'd pull it at the last second. And he didn't have, he had absolutely no intention of letting that order ever get filled. Well, when whoever the authority was there, the kind of thing, found out what he was doing, they sued him for spoofing and, convicted him of market manipulation and all that kind of stuff. It still happens. So you still have to kind of be aware of that. All right, here we've got a short using Heikin-Hashi's. Your stop would go here or here, depending on how you want to trade it. Target south, though, very close. Not a lot of money in this trade if you were to go short. That's the problem right now. is there's just not a lot of money in these trades. Now, if you're scalping, you can go over here on the 5-second and you can work this kind of thing using this. So you'd say, well, I'm short. Here would be my target south. Bang, just hit it. Look for a new entry. Ooh, ooh. Look at that, look at that, look at that. Now, to be honest, it was 1 point. Woohoo! But, you know, think about it though. If you had a scalping strategy, and actually this was Jeremy. Jeremy had a scalping strategy. All he was trying to do was capture 1 to 2 points. That's all he had. He was capturing 1 to 2 points on the 5-second chart. He was really good at what he did. So he'd make about 10 trades a day, make $500 bucks. Possible. Now, if you're a supply and demand or an auction market theory person, what can you see here? Actually, what I see is a trend line. Let me draw that in. Like that, sort of, kind of. I see that. And then on the top, maybe something like that. And you can say, well, what about this and this? And, you know, what really defines the trend? I'm looking to capture the majority of points. Not exactly tick to tick. That's the problem with trend lines, is price can chop. Just like fan lines are trend lines in a way, and you can see we chop all over them. But what you could, if you're a trend line trader, aka angular resistance, different people call it different things. Here we are. Look at there. Fan line. Here's my little trend line. Let's see what happens. Angular resistance and trend lines, same thing. There you go, hitting that resistance line. It's an area. It's also the 111 right here. See it? We got multiple signals giving us a possible reversal to the south. The 236 would be my stop if I were going short. Here is that very but we've got this very popular price level up here, which is chop. When we get in there, we enter a chop zone. All right, we've just crossed the 236. We're in the chop zone at this point. I would be, if I was long, I'd be looking to get out. Notice there are targets still in this chop zone. We've got a fan line, a pivot point, and the 50% measured move that we marked from here to here. So that pivot point and 50%, I really like that. This yellow line up here is a prior day volume point of control. And that acts as a magnet. So we've got a magnet inside of a chop zone. We've got several reasons to continue up to in here, fan line, 50% measured move, pivot point, and a prior day VPOC. Remember, prior day VPOCs are zones, they're areas. So think of a buffer magnet here that could easily encompass that pivot point, that 50%. So yeah, I think this 50% is a very valid target at the moment. Could be wrong. Could hit that fan line and just totally bail out. RSI over here on the 5-second showing us overbought, overheated. Can't see that. Let's watch. Zoom in and watch that a little bit. Let's see if I can get them both. There. Okay. Had a real nice Heikin Ashi trade here. And then indecision, small pullback. And there we go. All right. What do we have here? Heikin Ashi red. Ooh. Indecision. See it? Could continue north. But what's it doing? It's dipping down into this fair value gap. Remember, these are people that wanted to go long, missed their chance possibly. We're speculating. Understand, that's pure speculation. We don't know that that's actually what happened. It's just based on the patterns that we've seen in the past. You know, we kind of suspect that's what's going on. So these are people that probably wanted to go long, missed their chance. Again, we speculate on what the fair value gap means. We don't actually have any proof here that that gap has actually got people sitting there waiting to go long. Certainly we can look at the order book and see if there are any resting orders here. And actually there's not. There are some down here, 75.65, which puts us down here. So there are some people that want to go long, but we're at 75.67.5. So, I mean, definitely within striking range. Let's open this up a little bit. All right, notice the Bollinger Band sideways. We've lost that momentum. So now we're going into a little bit of compression. And because we're going into compression, explosions follow compressions. Not always explosions, but you can kind of see lower high here from here and higher lows here. So we kind of have a little pennant going on. If you like technical, if you like chart patterns, that would be a pennant. And we would be breaking that pennant as soon as we break the high of this candle, we break the pennant. And resume north. There we are, we're out of the pennant. We resume the northern march. That didn't work. Bang, right to that fan line, to the tick. And as you can see, it was rejected over here. By the way, if anybody wants the fan lines, I mean, I'm more than happy to share that and my modified Heikin Ashis. What's modified about it is I put that yellow dot on it. These are regular Heikin Ashi candles. I just added a dot right there so I saw exactly where price was. But the fan lines are not over here because this has a hard time calculating them on the 5-second chart. Easy to do on the 1 minute, the 5 minute. I don't put them on the 30 minute because there's, you know, it's too noisy. Too noisy. All right, sideways here. Let's go over here. All right. Watch these two. There we are. What happens? Bang, rejecting it. So if it goes south, going back down here. There. Ooh, 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 ooh. Look at that. Look at that. Remember that little trend line? That angular resistance trend line I drew? There it is. You see how all this stuff plays together? The algos can keep track of all of this. And the problem, of course, we as traders, is we don't know which one they're paying attention to. Right? Bad English. Anyway, to which one are they paying attention? We don't know. And that's part of how they confuse us and all that kind of stuff. It is what it is. Trading is a matter of probabilistic, you know, I'm going to use a word. Signet absolutely hates it when I say this word, but trading is gambling, is educated gambling, probabilistic and educated gambling, because we take a trade, we take a gamble, we gamble that it's going to make money, but by using pattern recognition, education, risk management, things like that, we limit our losses and take trades where we only take trades where there's enough money in it to make decent profit, where we want, let's say, a 2-to-1 or a 3-to-1 reward. See, this is another thing. People always say risk to reward, and then they say 2-to-1. You're like, I'm risking 2 to make 1? No, 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 that's not what I meant. Well, we always say it backwards. But I should say reward risk. But when you want to, you're looking to make 2 to risk 1 or whatever, that is where we are different from gamblers. Is that we have defined risk, we have strategic entry, right? All right, what have I got right here? I got an order block. Where is that order block? Let's just, it's not what I meant to do. I meant to do here. Order block. All right, so we went kind of bullish, little pullback, bullish, coming back into that order block. What is an order block? Reversals, chops, all kinds of stuff. It could be a demand zone in a way. A lot of these things are the same concepts. Notice that we're hitting this fan line right here. Left shoulder, head, right shoulder. $50, $78. I wasn't paying attention to that. I just saw it in the last second. There's the 78, a very common reversal area. Yep, so it hit the 78. All right, so notice we broke out of the top, chopped around in the 111 to 236 area, actually did close outside of it. That's bullish. But we got a little pullback here. Had a pullback, indecision. I'm going to say this is going to continue back up 75, 72, very possibly, and then 75, 74. There's that pivot point, 50%, Bollinger Band, prior day VPOC, lots of magnets right up in here as far as numerics go. Now, if we look over here in our chart, let me turn those drawings off. Hide drawings. Look at there's resting order sitting at 72, which is the pivot point. See that? The thing to understand is all these tools tell us much the same information, different ways. So do you need the order book? No. Do you need Bookmap? I mean, my gosh, man, Bookmap saves the world. No, you don't need it. Jigsaw? Man, Signet loves Jigsaw. Man, you really got to get... No, you don't have to. Oh, man, this Heikin-Ashi business, that is the bomb. I've got to get into that. No, you don't. You pick the one that makes the most sense to you. You pick the one that makes the most sense. I said at the very beginning of the stream, this is a grocery store. There's lots of stuff on these shelves here. And when you go into a grocery store, you don't take something from every shelf. You take the things that make sense for why are you in the grocery store today, right? So if Heikenashi's work for you, fantastic. If hollow candles like Signet does, fantastic. All right. If just traditional candles work, okay. All of it works. You got to find out which one resonates. When you explore the different trading strategies and the ways to set up your charts, some of these things resonate with you, and you say, you know, when I first learned about auction market theory, it made so much sense to me. I literally sent a message to Tom B. and I said, Tom, I think I peed in my pants a little bit. And when I saw this, and he started howling with laughter because it made so much sense to me. So it's part of my strategy, auction market theory. I got so giddy when I learned about it because it's like, oh, I get it. And that's why you see that I mark these prior day VPOCs. What happened to my little thingy? That's why I mark these prior day volume points of control, because we do move there. Yeah, let's see. Pardon me just a moment, catching up on some messages. Yeah, I'll be glad to. I'll post some. I'll post some. What am I trying to say? My indicators after the stream. Be glad to. But understand, since it's Ninja Trader, I don't share you a link. I give you the code, and then you can, if y'all need help, I can do a stream on how you add code to Ninja Trader, because mine are not in the public. I don't know how to publish an indicator in Ninja Trader. Never done it before. Took me forever to figure out how to do it under TradingView. A lot of this stuff can be done under TradingView. The fan lines can be done under the TradingView. The prior day levels can be done under TradingView, or the key levels. Fair value gaps are already in TradingView. VPOC. The only thing here that is not in TradingView, as far as I know, is the heat map, because TradingView cannot read level 2. As best I know and have researched, we can't do this heat map in TradingView, but we can do pretty much everything else in TradingView. One of the reasons that I like Ninja Trader so much is because it's Tradovate. But the Tradovate app, it's got some really easy to use and stuff like that, but you cannot do technical analysis lines on it worth a crap. In other words, if you draw a diagonal line on the 5-minute chart, it will not be anywhere in the right place when you switch to the 1-minute time frame. It cannot draw anything. It can draw horizontals fine, verticals fine. It cannot draw a diagonal line worth a damn. So, and that just irritated me to no end. So Ninja Trader is the more professional technical analysis type trader person version of Tradovate. It's not as simple, it's not as easy, it's got a learning curve to it. But I draw a lot of lines on my charts, and it's got hotkeys for all the different lines, like F2. F2 is a little short line. F4 is a ray. F6 is a horizontal line. F8, a measured move, and so on. All right, back to where we were. fan line VWAP. I think, no, is that VWAP? What is that? Oh, no, that's my measured move line, excuse me. We're still stuck in that 111, 236 area. Wow. Wow. This is interesting because, you know, we should have long since either burned this thing back to the inside or moved on. We have not. What do we see over here? Sideways. Maybe getting ready to roll. I mean, compression leads to expansion. We don't know which way the expansion is going to go. There it goes. It's going north into that big chop zone I talked about, but we still got these targets. Remember, I'm still thinking 75, 72. The problem would have been to find an entry. If I were going to have taken this trade, I would have taken it somewhere off of this fan line because I'm moving from one fan line at least to another. That's the way I would have done it. Let's see. Sorry, answering some messages here. Okay. Wow. All right, back over here. Come here. What? You're trying to draw something. There you go. All right, let's get my little thingy back. Wow. All right, while this is playing out, let me see if I can find this video from Auction Market Theory. I've had several people ask me about that. Here I am on the Bookmap channel. I'm going to search for Auction Market Theory. See if I can find that. That's 21 hours ago. Here, this is it. Intraday, and I'll post this link right now over in our Discord. Intraday Bookmap Volume Profile Auction Market Theory.
With him in.
Okay. If you're interested in learning about volume profile analysis and stuff like that, there's your video over in the Discord. Auction. I am in the main, right? Yeah, okay. There's that. Wow. Look at this. Stuck. All right, well, let's see. I think we're just going to sit here. Why is this happening? Well, it's very possible it's because Bassett is speaking. It's very possible that that's the whole reason behind it. Is he's talking and the algos have gone quiet as far as pushing things around. Excuse me. As they're looking to wait to see, is he say, we're going to bomb them or we're going to walk away or what? Who knows? Who knows on that? So I'm going to look to start winding this down. First of all, let me see, has anybody got any questions? I think hopefully I've answered all the questions. See that, Jay. Interesting. Where's that order line? 7567. I don't see it on mine. Any rate, there we go. Starting to move a little bit. Like I said, I'm still thinking 7572. That's where this big order is sitting over here. But it looks like it's going to be a fight to get up there, or a grind, or whatever. All right, I'll tell you what I'm going to do here, folks. I'm going to close this stream down. I'm going to take about a 10-minute break. And then I'm going to come back and very quickly, for those of you on NinjaTrader, I'm not going to spend a lot of time on this. My wife's looking at me with this. We have projects to do. Look. So I won't have a lot of time on this. But so I'll take about a 10-minute break. I'm going to come back. We'll go through NinjaTrader. And I will cut and paste and send my indicators over to y'all. And I will show you how to import these things into NinjaTrader. So, like I say, I'm going to wind this down now. We'll take about a 10-minute break. I'll be back for 15, 20 minutes to go through the NinjaTrader stuff. All right? So, we'll see. I hope this helped you guys some today. I hope somebody made some money with any of this. I hope I called out some possible trades for you. And more than anything, what I really need to know, is this the kind of content you guys want in the morning stream? Because to be quite honest, I know a lot of you are in here to trade the morning session. And if you are not liking the content that I am doing, because I'll be honest, I'm not a very good talk and trade at the same time person. And it may be that somebody else is better for the role. And that's fine. That does not hurt my feelings in the least. If I'm not right for the role, that's fine. But if my content is helping you, please let me know. If the content was like, this is not what I signed up for, you're not going to hurt my feelings in any way. I need to know from you, and Lucian needs to know, that whether this content is right for you or not. Because this is a question of what are we going to do. So please let either me or Lucian know whether the content works or does not work for you. It will not hurt my feelings in any way. We're just testing the waters. So with that, I'm going to sign off. Back in about 10 minutes. See you guys.
Thanks, Mars.
Yeah, man.